Hey traders, welcome back to another Sunday video where we prep for the week ahead with trade setups and ideas. And I just wanted to start out by acknowledging those of you guys who are in our Telegram channel. You voted and let us know what you wanted to see most on the channel and as well as in Frank and I's channel that we share stuff in Telegram. We are going to be focusing on mostly the top three here. We're going to be keeping a focus on the US dollar as well as crosses, FX crosses, gold, the NASDAQ, and we'll dip into these other things, but based on popular demand, that's where we're going to try and keep the videos focused on, as well as the Telegram channel posts analysis that we do there. By the way, the link to that will be in the description if that's something you're interested in grabbing access to for free. Anyways, here's a couple things to think about. This is a busy week ahead. In fact, it's incredibly busy for a number of reasons. We have some macroeconomic data that's going to be big. I believe we have core PCE. In fact, let's just do a quick check on the Forex Factory side of things. Let's go this week, and we're just going to filter for red folders only because I do believe that we have some pretty big stuff. Yes. So we've got some Australian CPI numbers, flash manufacturing PMI. This will be important for U.S. economy stuff. The Bank of Canada is going to choose on their overnight rate, their interest rate decision. We have Fed Powell speaking 4:35 p.m. on Wednesday, and that's Eastern time, of course. And we end out the week with core PCE. Now, of all the things that are on the list, I'm going to say this is probably the most important figure. PCE is a measurement of inflation that the Federal Reserve very much pays close attention to. And so, yeah, that's going to be market moving for sure. Let's take a look at the dollar now. We're going to go in order of what was by popular demand here. And you guys let me know in the comment section if you like this new roster of things. But I'm excited to just kind of do what the community is most interested in. So let's start out by taking a look at the US dollar first, and I want to highlight just kind of our range that we've been trading in recently. So you've got this upper resistance and upper higher resistance, right? So you have support and you have resistance going on the daily chart for the dollar index. I actually am still a dollar bull. I've stayed dollar bullish for some time, and I think that this longer term channel that we're in is likely to continue until we get some sort of change in pace on things related to the US economy, which is still very strong overall. I think that we have a good shot at seeing the dollar continue higher. Now that's going to take me into my biases when I talk to you guys about gold, the euro, the dollar yen, the pound dollar, etc. But I want to talk, heavily about just how powerful this dollar uptrend has been. Why has it been so strong? Well, one of the big reasons for this, you take a look at this really strong daily chart uptrend that's been going on since, mid-July. It's because the U.S. economy has been incredibly strong. And what I mean specifically about that is the jobs market in the U.S. is really strong. We've seen really strong labor statistics. We've seen the retail consumer still stay strong, which is, again, a driver for inflation, and higher than expected inflation is going to usually result in longer, higher rates for longer, which is the story right now for the dollar index, which has been so bullish for that reason. Now, as we get down to the 4-hour chart, we probably should mark this area of support here. So bulls, keep an eye on this. Again, remember, we just pointed out the longer term upward trend line that you saw. I took it off my chart because it kind of muddles the view here. But this area is an interesting one to watch. If we do start to see breakouts, I do think that, a break of this area here, you've got 106.6 looking left. This area could be big for markets. If we're able to get above and stay above that area, it is likely, in my opinion, that we see a move back to the 107.2 high that we saw previously here over in early October. So I'm looking at the dollar index with a bullish bias. Now, of course, that comes with a couple different charts that we could discuss in terms of what to actually trade this off of. But I always find it very important, whether you're trading indices, whether you're trading currency pairs, gold, to keep an eye on the dollar index. It's so dominant, and it's so important to keep a close watch on. Now, bears, if we do start to see breakouts here, if you're bearish on the dollar index, for example, maybe you're long euro dollar, long pound dollar, long gold, etc., maybe you think we're going to break this level. What I would say is that if you do get some sort of strong close to the downside, which would be, very possible, possibly we see a pushback down to this 105.6 level, but I think you have longer term bulls who are still in the interest of buying this thing on a dip. And so I would keep a close eye if we do see movement to the downside. My opinion would be it is likely to be short term, as the US dollar, part of the reason it's so strong is you take a look at other currencies like the euro, the dollar yen, the pound. We'll talk about those things in just a moment, but let's move on to gold here. And I want to talk gold from a daily chart perspective. I'm really not going to get much lower time frame than the daily chart here, because there's something I need to discuss with you guys about this chart here. By the way, if you would do me a quick favor as we're going through this video, if you guys are enjoying what you're seeing here on my channel, hit that thumbs up button. It really does help to support the channel. We're trying to make some changes and improvement here on the channel to make it better for you guys. So smash that thumbs up button if it's been helpful to you so far. Now, I think one thing we've got to discuss about gold is what was the latest on the COT report data. And we can take a look at that by going over to this page here. This is the Smart Money tracker page on the Edge Finder, which is our company's software. And I want to show you this. Where are we at with gold? Well, you'll notice that gold is at 66% long to 33.9% short. Now, what does this mean? Well, this is the institutional positioning. This is what big money, hedge funds, where their money is parked. And at first glance, you might say, well, wow, gold is clearly a buy from the pros. The pros are buying gold. Pros are also buying dollar, by the way. So keep this in close monitoration. Monitor this closely, because look at this, 75% long on the US dollar. And this is, of course, how gold is quoted. So if gold is quoted in dollars and the dollar is very strong, you got to keep an eye on this. So I'll show you this in just a moment. So this is the overall positioning. But let's take a look at the latest filing. So if we go down here, this section is really my favorite part of the page, where we can see the latest filing on the COT report data. Did they change? How did, as of the most recent data, which is Friday's data, what was the latest change? Well, this confirms that gold has some serious interest from institutional money. Now, you guys may have heard me say last week that I've been pretty bearish on gold. And that's because if you take a look at the week-to-week change, we go scroll down here, we change this quickly to gold, you can see that gold has overall been in a pretty bearish trend in terms of institutional money. So big money has been shorting and selling gold at a pretty rapid rate. You can see they increased shorts over the past few months, and they've decreased their longs pretty substantially. Conversely to the dollar, where they've increased longs and they've decreased shorts, right? So institutional money made a little bit of a blip last week, which is really interesting. And this is going to further confirm that I am not going to be shorting gold. In fact, I have a bullish position on silver, but we'll talk about that at another time. So I am bullish silver, and at this point with gold, this is a huge institutional push into gold right now. That's 6.43% change on a week-to-week basis on all of their positioning, right? So we can see all their long contracts. They changed by increasing 11,000 long contracts, and they closed out 30,000 short contracts. This is incredibly bullish for gold, because it seems like big money is piling into it suddenly. And so again, when we look at the COT report data, this gives us clarity. It gives us insights as to what the pros are doing, because at the end of the day, they're the pros, right? They're the pros. That's why they're on this list. That's why they're being tracked here. So anyways, the other one that I wanted to point out while we're on the topic is keep an eye on the NASDAQ, the S&P, silver, euro, oil. All of these things got a nice bid from institutional pros, right? Flip it around and you can see NZD, CHF, USD got a little bit of bearishness in it. That's kind of concerning, right? So maybe part of our USD analysis here, we have to be objective. We have to say, well, there's a little bit of bearishness that came in on the COT data. So by the way, guys, you can access this report using the link down below in the description. You can chat with someone on our team if that's something you're interested in getting access to, or you can sign up on our website, a1trading.com, get yourself an Edge Finder copy. There's a promo code down below in the description, which will knock off some of the price. If you are a YouTube subscriber here, we do appreciate your support. And yeah, you can get yourself a discounted copy. So gold here, as it comes up into this area, I've marked this out. With COT data looking so strong, this has me very much interested to see if we're able to break through this level. Because if we break through this level, it's very possible that buyers are going to want to support this and run it back up to 2054. Now, I made this point. Now, I want to be clear. Some of my viewers are going to point out, Nick, you were bearish gold. Don't act like you're suddenly bullish. Well, here's the thing. In trading, it's very important to be adaptive. I didn't take any shorts on gold. Some people were memeing on me a little bit in the comment section, which sometimes is totally valid. Sometimes, oh, if you want to meme me on something, meme me on my NASDAQ trades. I've been getting killed on the NASDAQ recently. I've just been wrong 3 times in a row. So if you want to meme on me for the NASDAQ. But right now, gold is I haven't taken any shorts in gold. I haven't been on the wrong side of this trade. My sentiment has been bearish, but with this latest COT filing, things kind of got to give. I got to crack a little bit on my, there's no point in being stubborn in markets. So this thing is strong, but what's really going to prove it to me on a price action standpoint is, can we actually get the breakout higher, right? If we get the break, we get a close outside of this, perhaps buyers are involved, right? But again, the pros went long last week, and that's important data for us to understand, because if the pros are doing it, then again, it's hard to win against the professionals. So I think we head back to the highs, and I think that, of course, you may have pullbacks in the meantime. You may have kind of opportunities to be a bull more than once. You know, maybe you're also saying, well, if it pulls back down to this area, perhaps there's value there, right? You've got past resistance. So maybe bulls are looking for that opportunity to enter. But again, I'll keep a close eye on this. Am I going to go long on it at this level? No. I've got to see a price action setup, and I've got to see that the Edge Finder does confirm my analysis in the top setups window. So currently you can see gold is not on the list. So gold is not quite strong enough for me. If I go to the gold scanner just to get an insight view here, you can see I've got a +2 on gold. Now this is much more bullish than it was. At one point it was shooting down here. So now we're all the way up here. We're almost into bullish territory on the Edge Finder. Now again, this is a dramatic change in scoring. Take a look at this. You can see the score historically. It was bearish for quite some time and caught this move beautifully, but now it's been a little bit on the wrong side. And again, with any indicator or tool, there's no perfect signal. But if you had caught some of this change in direction, then congrats to you. I'm still kind of early signs seeing some bullishness, and this score is derived from all of these characteristics down here. So again, when we take a look at COT data though, it's actually bullish for gold. You had a really big increase in gold's COT data. So there it is for gold traders out there. FX majors traders, if you guys are trading the euro, if you're trading the pound, etc., let's get into some of that. So I wanted to really quick say this. If you are somebody who is a regular viewer, I do appreciate if you left a vote on my tab there. I put it on my community tab. We're going to try and focus a little bit on these things, but we will, of course, still get into, oil and US 30 and things like that. The ones that were most requested were gold, these crosses, and the NASDAQ, surprisingly, which is awesome because the NASDAQ is my favorite thing to trade. So, yeah, anyways, let's keep going. So the Euro USD. So I mentioned I have an overall bullish bias on the Euro. I'm sorry, on the dollar. Well, we take a look at this. COT data kind of goes against me this week because of what we pointed out with the US dollar bullishness, right? So when we take a look at the net change, we see the US dollar had a little bit of a bearish week in terms of professional movements, right? But the euro had a bullish move, so that's not quite great for my bias. However, there's still a lot of other factors that I still like bearish, and I'm softly bearish on this. I have a position. I will stop out if price does start to reverse. But again, and this is by the way, this is my trade. So I have a Euro USD short. I took this off of the 4-hour and the daily chart. And my thought process with this is that as we go into this week, you've got resistance overhead. I like this area. And if price pops above this, I'll stop out for a loss. But if this market rolls over, I think I have a good risk to reward here. I like my trade. And I think there's a good shot that we see the euro continue lower. One of the big reasons for this is that, again, you go back to the economic figures, and let's walk through this together. So GDP growth is much higher in the US. Growth has been strong. The economy in the US has overall been very, very resilient. Right off the bat, that's bullish for US dollar, right? So we get in that category, GDP growth -1. Why -1? Because remember, we're trading across you. If we're bullish USD off that data, that's going to bring down the currency pair score, right? So bearish on the euro dollar due to this strong GDP growth for USD. Inflation is actually a deterrent here because, again, inflation actually went up recently in the US. Yes, it's lower than the European region, but inflation has come down in the European region where US inflation has actually ticked higher. So that's actually a bullish factor for the dollar again and bearish for the euro. We will be adding change to this at some point in this section so that you can see that change, but just know this number is ticking higher from its previous. We pay close attention in the algorithm to recent change on these statistics. Unemployment is lower in the US, showing job resiliency, and that is, of course, dollar bullish. Interest rates higher in the US, bullish USD. Okay, so all of these things considered have me more bearish than they are bullish. Dollar yen is the next one. If we take a look at this chart, still bullish on this one. I think that the Bank of Japan intervention stuff is a little bit cautionary tale, right? They could still get involved as we near that 150 mark to try and exchange prices. If you're not familiar with what I'm talking about, the Bank of Japan has mentioned that they don't like the currency exchange rate basically at this level. It's very expensive for them to buy US products when it takes 150 yen to buy $1, right? So they don't like that. And so that is a pushback on it. But the US dollar is still very strong for a multitude of reasons. And it doesn't necessarily mean just because the Bank of Japan doesn't like the currency exchange rate does not mean it cannot continue to press higher. But I think there's probably an argument for some give and take here, some back and forth trading for some time. So it's probably not my favorite pair on the list right now. Overall, let's take a quick look at what the Edge Finder has for this reading. So we take a look at USDJPY. Again, you can click whatever chart, whatever you want, and then grab that data. It shows up right in your screen. So very bullish for dollar yen. So one thing here is retail is very short, right? Retail traders very short. The trend is to the upside. Seasonality suggests bullishness during this time of the year, right? We study many factors on the Edge Finder. If you don't have the Edge Finder, by the way, it is a game changer. It will literally do so much work for you, basically giving you tons of data, tons of factors, and a bias to go with it. So I trade with it every single day. I do not leave home without it kind of thing. It is an incredible tool that we've worked on for the last year and a half, and we are very proud of it. If you'd like a copy, like I mentioned earlier, you can get a copy using the link down below in the description. Click that link. You can message someone on our team if that's something you're interested in, or you can use the Edge Finder link that's down there and use the promo code for subscribers. You'll get a discount off of the tool. So check it out. And again, if it's right for you, then get yourself a copy. It is highly worth the money if you're somebody serious. We do one-time purchases, meaning if you get access to the Edge Finder, you don't have to pay monthly. It's not some like subscription that never ends. It's one time you purchase access to it, you get access to our tool, you can use it, and we do all the heavy lifting. We curate the data, we monitor it, we bug fix every day. There's a staff of 3 people specific to the design side. There's 10 of us at A1 Trading, but there's 3 of us that are dedicated just to keeping the tool updated and working hard. But anyways, again, that's part of the thing that you get with getting the tool. You get our expertise and our constant support. Anyways, dollar yen, that's one chart. Pound dollar, still bearish overall, I would say. If it pops this week, I think I still like the short side, so we'll keep a close eye on that one. But I've got resistance up here around 1.2220, something like that, at this previous level here. We broke out of this kind of upward channel and price has been trending lower. So a break back up into this area, to me, still looks bearish overall. Let's take a look at the NASDAQ. So of course, NASDAQ, very interesting chart for me right now. What you need to know about this and what you might not know is that we talk a lot about macro, right? We talk a lot about macro economics, big picture stuff that goes on in the world, right? I'm talking about the Fed funds rate. I'm talking about the geopolitical conflicts in the Middle East right now. I'm talking about, the European economy. We talk macro. We talk big stuff. Well, stocks often also trade on micro. And if you're somebody out there who's trading US 30 or S&P or the NASDAQ like myself, if you're one of us, then what you need to also understand is that micro factors also very much impact NASDAQ. Micro impacts everything. This is smaller scale stuff, but smaller scale in stocks is earnings, okay? At the end of the day, what a stock earns is going to drive price higher or lower in the short term and in the long term, right? Earnings are big this week specifically. Now, why am I saying that about NASDAQ? Well, NASDAQ is a basket of a lot of tech and finance stocks. Well, finance had a pretty good start. We saw JP Morgan's earnings. We saw good earnings out of US stocks so far. However, this week matters the most because what's in here is things like Apple and Nvidia and Google. And you also have Microsoft, right? Well, a lot of these names, I don't think Nvidia, I can't remember. I know we get Microsoft, we get Google, Apple, and Amazon this week. Earnings are coming out. And this is going to have huge impact on whether this chart breaks lower or breaks higher. I'm optimistic about earnings, and I think that we see a price move to the upside here. I think that we are overdone in the short term. I think this thing is due for a bounce, and we are sitting at support. Now, am I right about this, or will I be certainly right about this? I could be totally wrong. But my opinion is that this has been an overextended move to the downside. We have earnings, which could be a short-term catalyst. We have an economy that overall looks strong, and the Fed doesn't seem to be thumping the table saying they want to take rates higher. So we have some things that support price. And on the daily chart, we've still kind of got this, yes, there's been this short-term downward trend, not even short-term, but past couple months. But longer term, this level has been incredibly strong for bulls. I'm willing to bet on this area. I've got to stop below this area. I'm already long, full disclosure. And my thought process on this is that if price is able to push above this area here, I think we have potential to make a way back up to this area and even break out into the end of the year close. I am thinking that we could see a nice fourth quarter rally here based on stock earnings, as well as, again, you have a Fed meeting in November, which is likely not to be a rate hike. So those things combined, I think there's upside for stocks. Am I going to be right about that? Time will tell. We'll see. If I'm wrong, then I'm wrong. But if I'm right, I think I stand to gain a lot more than I stand to lose. So I am long NASDAQ. That is a trade for me this week. I've already got that trade open. So you guys have seen my two trades. I'm short Euro. I'm long NAS. And we'll see how this one wants to play out. But again, I've got to stop below the lows. And if earnings hit, as I think they could, then very likely this is going higher. However, if earnings disappoint in any way, this is probably going to break lower, and that's going to be the end of my short-term bullish idea that I've had on the NASDAQ that I've been playing recently. So next up is US 30. US 30, the Dow has been just getting pummeled here. Really the big catalyst here to the downside for my Dow traders and my NASDAQ traders. Here's the thing. You've got some trouble with the NASDAQ, with all stocks right now, but you've got some real trouble with the Dow because a lot of these slow and steady dividend stocks, they have a new competitor on the block, and that's the 10-year yield. If you're somebody who's an investor and you're sitting there and you're thinking, well, I need to just get passive income kind of going on, why would I buy dividend stocks, which look really scary right now with everything going on in the world, when I could just buy bonds and collect 5% almost just for parking my money? 5% nearly risk-free compared to what many traders buy the Dow for. Investors, people who are interested in buying the Dow, many times they buy the Dow or Dow-related stocks. These are the big, stable, ancient companies. They buy them for their dividends. They buy them for their security. Why would I need to try and go for that security in this when I could go for bonds? So I'm not particularly bullish the Dow at this time until something changes in that department. Still we see, I think that there's an area of the market that continues to reign supreme, and that's the NASDAQ, because overall it's done very, very well because a lot of these companies are cash rich and they're not so devastated by rising interest rates. So again, you take a look at the NASDAQ compared to the Dow. The Dow's had a lot of struggle. Am I bullish Dow? I think, longer term, you probably get some good value here, but the downtrend is really strong. And I'd personally, before trying to trade this one, I'd like to see, breakouts higher. In the short term, it does look like we may even be headed back down to test the lows. So that's my thoughts on the Dow. US oil, quick move here. Still bullish. I am possibly looking to get another re-entry here. If we go back to the Edge Finder's top setups page, we still got US oil on this list. By the way, also, we are technically bearish bonds. This is US 10-year yield, right? So if we're bullish the yield, we're thinking bonds are looking ugly. So I continue to stay bearish bonds. I've been bearish bonds for some time. US oil, right? Looks bullish overall, again, due to conflict and uncertainty. Overall, I took a long trade. I made money on oil this past week. I'm looking to see if I can repeat the process and find a setup. Speaking of technical setups on that regard, where am I at with this? Well, my stop was hit right on this. I trailed out, so I entered over here, put a stop loss here, and when it kind of came back into play, I was stopped out. So I gave back a lot of my gains here, unfortunately. But I like the way this candle closed. I may look to re-enter this one as the market gets open up here today. If I do take that trade, you guys will see it inside of our Discord channel. And by the way, if you're not in our Discord channel, there is a link to that down below in the description. So check that out. Click that link down there. If you guys would like to join the Discord, we have a free and a paid version. The paid version will get you access to trade alerts. The free version will get you access to our free analysis each day. So the other story for oils, if I miss an entry, is watching for a breakout here. That might get me another entry. Anyways, guys, remember, you can get access to tons of cool stuff down below in the description. If you made it to the very end of this video, I just want to say thank you for your support. Thank you to those of you guys who voted to let me know which charts you'd like to look at most. And hopefully this was a helpful video to you. Smash that thumbs up button if you enjoyed. It's the best way to let me know that you're enjoying this content and that you'd like more of this type. Thank you very much. Have a wonderful day.